If financial advice is free, who's actually paying for it? Because someone always is. Here's the thing nobody tells you: free doesn't mean costless, it just means the cost is hidden. And if you don't know where it's hidden, there's a good chance you're the one paying it without ever writing a check. By the end of this video, you're going to know exactly where those hidden costs come from. And I'm going to give you 3 questions you can ask any advisor, free or paid, that will tell you almost everything you need to know about whether their advice is actually built around you. Let's get into it. First, let's talk about why free advice exists in the first place. Because nothing in this industry is actually free to provide. Someone is paying the bills. A lot of free advice comes from people and institutions that have a financial incentive tied to what they recommend. Bank representatives, call center reps at big investment firms, even some advisors who call themselves free because you don't pay them directly. In many of these cases, how they get paid is connected to what they sell or what you do with your money, not to a flat neutral fee for advice that has no strings attached. Now, I want to be fair here. This doesn't mean every single person giving free advice is doing something wrong or that they don't care about you. Most of them do. But it does mean their guidance is shaped, even if they don't realize it, by what pays them, not necessarily by what's actually best for your retirement. That distinction matters more than most people think. So, where do these hidden costs actually show up? Let's break it into 3 places. Number 1, commission driven product placement. If an advisor earns more for recommending product A over product B, that creates a pull, even a subtle one, toward product A. You may never see that pull, but it's there. And over time, it can steer you toward what pays the advisor, not necessarily what fits your situation. Number 2, expense ratios and ongoing fees. These are the quiet ones. A mutual fund or managed account might carry a 1% annual fee. That sounds small. It isn't. Let's say you have $500,000 in a retirement account and you're paying 1% in fees every year that a different strategy wouldn't have charged. Over 15 to 20 years, that's not a small number. That's often tens of thousands of dollars in growth you never get to use. Not because the market underperformed, because the fee quietly ate it year after year, compounding the entire time. Number 3, missed alternatives. This is the one people almost never think about: what you weren't told. If an advisor doesn't offer fixed index annuities or doesn't get paid to recommend tax efficient income strategies, there's a good chance you'll never hear about them. Not because they're wrong for you, but because they're outside that advisor's toolbox. You don't know what you don't know. And in retirement planning, what you don't know can be the most expensive part of the whole plan. Now, here's where it gets personal for a lot of you watching this, because this is where I spend most of my time with clients: Social Security and Medicare. Most free advice stops cold right at the edge of these 2 topics. Why? Because there's no product to sell there, no commission attached to telling you when to claim Social Security, no fee tied to helping you avoid an IRMAA surcharge. So it often just doesn't come up. And that silence can be expensive. Claiming Social Security at the wrong age can cost a household tens of thousands of dollars in lifetime benefits. Triggering an IRMAA surcharge you didn't see coming can mean paying hundreds of extra dollars a month for Medicare for an entire year because of one decision that wasn't planned around. These aren't product mistakes. These are strategy mistakes. And strategy mistakes don't show up on a fee disclosure. They show up later, quietly, in a smaller check or a bigger bill. Free advice often stops exactly where the most expensive mistakes begin. So let me show you what I think free should actually look like. And I'll use my own process as the example because I want to be completely transparent with you. I perform a retirement income analysis for my clients. Here's what makes it different. It's not built around a single product. It looks at the whole picture: your income sources, your tax exposure, your Social Security timing, and your Medicare costs, including IRMAA risk. Now, I'll be straightforward with you. I'm a licensed agent, and yes, I do sell fixed indexed annuities. I'm not going to pretend I don't have any incentives at all. That wouldn't be honest, and you'd be right not to trust it. But here's the difference: the analysis comes first. It's diagnostic. We look at where you actually stand before any recommendation ever enters the conversation. If an annuity fits your plan, I'll tell you why. If it doesn't, I'll tell you that too. That's the standard I think free advice should be held to: transparency about how someone is paid, and a process that looks at the whole picture before it looks at a product. So here's what I want you to walk away with: 3 questions you can ask any advisor, whether they're charging you a fee or telling you it's free. Question 1: how are you compensated for this advice? If they can't answer that clearly and directly, that's information in itself. Question 2: what alternatives did you consider, and why did you rule them out? A good advisor can explain their reasoning. If there's no reasoning, just a recommendation, be cautious. Question 3: does this account for my taxes, my Social Security, and my Medicare costs, or just my investments? This question alone separates advisors who see your whole retirement from advisors who only see the part of your retirement they get paid to manage. These 3 questions will tell you more about an advisor's incentives in 60 seconds than any brochure, any commercial, or any free label ever will. So let's bring this all the way back to where we started. Free advice isn't free. It's just paid for differently. And the real question isn't whether advice is free, it's whether it's paid for in a way that actually lines up with your goals. If anything I've shared today resonated with you, get the free booklet called For Those Who Want to Prosper and Thrive in Retirement. Check out the link in the description box to get that information. If you found this video helpful, please give it a thumbs up. It helps more people find this channel and get access to this kind of straightforward retirement education. And if you're not subscribed yet, hit that subscribe button and the bell notification so you never miss a video. I'm Shonda Prescott, and this is Retirement Security Simplified, where we specialize in turning confusion into confidence, one conversation at a time.